All right, I just started the YouTube stream. So, I'm streaming on both YouTube and TikTok right now. So, yo, what's up for you guys watching this on the YouTube replay? We're just going to be looking at a bunch of stocks live, doing some full analysis on them, and I'll give you a quick stock portfolio update. Here's my main taxable account in the overnight market, and here's all the stocks that we own in here. Here's them by total equity. This is my dividend growth portfolio. So, every stock in here actually pays a dividend, and every stock in here is also in the S&P 500. Here's my total percent change on every stock in here. So luckily we are up on every single stock in here. We're just barely up on Google. My most recent purchase is actually United Health Group. I can't believe this. This stock is under $400. They are down 21% year to date. So I decided to buy a little bit of them. Yo, what up, one five? What's up, dude? How's it going? So yeah. If you guys got any stocks I'm going to look at too, let me know in the chat. I'm about to go to the stock analysis. So yeah, here's my Roth IRA as well. We just got two stocks in here, InnoData and Kroger, which is kind of like a grocery store. And here's my Moomoo account as well. My Moomoo account actually hit an all-time high on Friday, so that was good news. We're up on every single stock in here except Perion Network down here. This is why you don't listen to me. We're still down like over $1,000 on that stock. Kyle said UNH is a great value here. You know what? Yeah, I really like United Health Group. Yo, what's up, Angel? How's it going? I'll give you a quick analysis on United Health Group. I really like this one as a dividend growth play. They actually have a 2.10% dividend yield. Payout ratio is only a 52%, so they actually have a lot of room to raise the dividend. And the PE ratio is a 16. They're trading at 16 times net income, and we actually use their Optum RX. Just look at the growth of their Optum RX business. I mean, this is incredible. It's up 15% year over year. So anyway, United Health Group is one that I really like as like a dividend growth play. Let's see. How come we don't max out the Roth? Yeah, I do. Yo, what up, Delilah? Yeah, I do need to max out my Roth IRA. Someone said hims and hers. Yeah, what up, David East? How's it going? So I'm reading both the YouTube and the TikTok chat. We're streaming on both right now. So here's hims and hers. This is actually a debt-free company. They literally have no debt whatsoever. And here's the most impressive part about this company. I mean, this is incredible. The sales are up 95% year over year, literally to a new record. So that's what I like about hims. The fact that they literally have no debt. They have this monster balance sheet, growing their assets, growing their cash. Yeah, 300 million of cash, no debt, and they're making net income every quarter, free cash flow every quarter. They're on my zero debt watch list. I have a watch list here of stocks with zero debt. You've probably heard of a lot of these like Duolingo, Pinterest, Zoom, Reddit, Yelp. They're all debt-free companies. I'm up 6% all time now. Yo, that's what's up, 1.5. Justin said Google will hit 170 this week. I really hope so. Yeah, we'll look at CRWW or CoreWeave, I think that is. So here's Google. This is a great dividend growth company. They just reported earnings, and the earnings were fantastic, man. They're trading at 18 times net income, so they're trading at a very fair valuation. But look at this right here. Here's what I didn't believe. The sales are up 12%, but the net income was up 45%. This was crazy. 34 billion of net income. If we go to their net margin, they actually just grew their margin to a 38% net margin. I almost didn't believe it. They own YouTube, they own Android, they have the Google Cloud. Like, look at just the Google Cloud business. This is incredible. The Google Cloud business just hits a new record every quarter. That's like high margin for them. But yeah, Google's a great dividend growth, just buy and hold for the long run kind of company. Yo, what's up, Turk? How's it going, man? Oh, someone Lala said QQQ. Yo, in my opinion, never buy QQQ. Buy this ETF, QQQM. Yo, what's up, Corey Potter? QQQM is the exact same ETF, but with a lower expense ratio. It's the exact same NASDAQ 100 strategy. So there you go. That's kind of not my not financial advice there. I do like that company. Again, hey, appreciate y'all being here. Yeah, if y'all want to hit the follow button, we go live every day, twice a day. I don't sell anything, by the way. I don't have a book, course, Discord. I don't got none of that. So yeah, someone said CoreWeave right here. They just IPO'd. Wow, they were up 16%. Unfortunately, they literally just IPO'd, so there's not much history I can look at. All I can really look at the revenue growth from 1 year ago. 2023, it was 116. Now it's 700 million. So that's a real incredible growth rate. I wish I could give you more thoughts on them, but I know only like 10% of the company is available to trade. So not a lot of shares. Will Berkshire get crushed this week? Yo, did you guys hear the news? Warren Buffett is stepping down as the Berkshire Hathaway CEO. So Warren Buffett's no longer the CEO. And did y'all know Berkshire Hathaway has been crushing the S&P 500? It's literally at an all-time high right now. So congrats if you own Berkshire Hathaway, because you'd literally be at an all-time high. They own a lot of businesses. They own Geico, for example. That's their insurance business. They own Dairy Queen. They're in manufacturing. They're in all these different businesses right here. So they just make so much net income. Look at that, 19 billion in the most recent quarter. So yeah, Berkshire Hathaway. I wonder what will happen with them with the new CEO. Oh, yo, Marcus, what app? Yeah, if you want to get this app, it's in the link tree in my bio. It's the first link there. BRKB or VOO. Oh, yeah, we could. I like the VOO, the S&P 500, but Berkshire Hathaway has been beating that stock. So here's ticker symbol VG right here. This is a $21 billion company. They're trading at a very low valuation. So what is this right here? I don't know how to pronounce that. Something project. Well, let's go check out the sales right here. So the sales are down 6% year over year. That looks really weird though. But I guess if you average out the 4 quarters, they are making net income when you like kind of average it out there. Their balance sheet has exploded. Cash from operations, dang, what I I gotta do some more. Liquefied natural gas. So this is a natural gas company. Dang. I wonder why the stock hasn't done so good. That is weird. Yo, what up, David? He said DRS stock. Yeah, let's check out DRS. I haven't heard of this one either. So, wow. Congrats if you own this stock because this one's at an all time high right now. Look at that. And they're an $11 billion company. It looks like they just reported earnings. Advanced sensing and computing. So, this sounds like a really niche business. Yeah, look at that. Looks like the sales just hit an all time high. Um, Integrated mission systems. Well, that's cool. And look at that. They're a net income positive company. They're making net income every quarter. So, actually, DRS, I can see why this stock's at an all time high. Yo, what's up, Jello? How's it going? What's up, Trapper 008? How's it going, man? So, someone said Palantir. So, Palantir reports earnings on May 5th. Is that tomorrow? Yeah, tomorrow, Palantir is either going to go up or down a bunch. This company's already at an all time high. So, I'm curious to see what'll happen. The government is a huge customer. A lot of police stations use Palantir's, software. And look at this right here. It's incredible. The government revenue is up 41% year over year. That's why there's a lot of hype around Palantir. They deserve it. They also have literally no debt. The Palantir is a completely debt-free company, which is just insane. They're making net income every quarter. So yeah, how much cash have they got? They got 5.3 billion of cash on hand with no debt. So yeah. Yo, what up, Glint? How's it going, man? Oh, someone said SoFi as well. Yeah, I'll show you my SoFi Technologies position. This is a fintech right here. They have their own banking charter. I do own a 24 shares of them. Again, not much. With these riskier kind of companies, you don't want to have a huge chunk of your portfolio in them. But here's the best part about SoFi, in my opinion. It's this financial services business. I mean, I just like looking at the fundamentals and see how they're doing. And for SoFi, their financial services business is up 85% year over year, literally to a new record. So that is incredible growth on SoFi. And also the net income. SoFi was losing money every quarter. No one could really take them serious, but now they're actually making net income every quarter. So yeah, SoFi, I might be biased because I own them, but I do like them. AP. Oh yeah, hey, if you Bouja, if you want to get this app right here, it's in the link tree in my bio. First link there. It's actually a brokerage. What up, Ryan said ARW stock. Yeah, try not to spam. I'll try to get to all the stocks here. I do apologize. So here's Aero Electronics. Huh, I haven't heard of this one before. Do they pay a dividend? They do not pay a dividend, but they're trading at 15 times net income, which is pretty fair. So the sales are down 1% and the net income's down 3%. So they kind of just lost their growth. Yeah, dang. That's probably why the stock has just slowly been bleeding out. And it hasn't really outperformed the market just because it's negative growth. But they're still making net income every quarter. It's not too terrible. I mean, Novo Nordisk in VR. Oh, yeah, we can look at Novo Nordisk. Yeah, this company just partnered with Hims to make a weight loss prescription. So check out Novo Nordisk right here. Let's see. Oh, sorry. Just sneezed. Okay, so look, Novo Nordisk trades at 20 times net income. So they're trading at a very fair valuation. That's because they own Ozempic, by the way. This is the stock that owns Ozempic. Apparently, the Ozempic patent expires in 2027. But for right now, this company is printing money right now. Look at that, 3-4 billion of net income a quarter. Very impressive. 2% dividend yield. Very low payout ratio, but they just partnered with Hims, which is a really cool sign, to sell a new weight loss prescription for $4.99 a month. So nice. Yo, Frank said INOD. This is InnoData right here. This is one of the two stocks I own in my Roth IRA. So here's my Roth IRA right here. One of the stocks in here is ticker symbol INOD. I am up 22% on them. Here's what I think: this company has the easy ability to double in stock price. Again, not financial advice here, but look at this. This is what I love to look for. The revenue here is up 161% year over year. That's an incredible growth rate. Same with the agility business. It's up 25% year over year. And this company's now profitable. They made net income in the two most recent quarters. They're growing their assets while lowering their liabilities. They have no net debt, cash from operations. So everything, I actually just made a YouTube video. My most recent YouTube video I made literally today was about them, if you want to check it out. My YouTube channel is called Nathan Robert, link tree in bio, first link there. Yeah, what's up, top man? Yeah, Hims did go crazy this week. Yo, Trapper 08, thanks so much for the rose there, dude. I really appreciate that. Is this Robinhood? No, this is not Robinhood. But someone said to look at Hood's stock though. I do own a little bit of Robinhood in my other brokerage right here, my Weeble. Check this out. So yeah, we do own 5 shares of Robinhood. We took a lot of profits on them, but I do have a couple shares left of this stock. And here's what's so impressive about them. You see their net cumulative funded accounts, 25.2 million. But here's the best part: is the net income growth. This company's making like 300-400 million of net income a quarter when, just a year ago, this company was losing like 300-400 million a quarter. They lost $1 billion that one quarter, but now they're finally making net income every quarter. So Hood people can finally take them serious. I love the growth on them. So yeah, I do like them. HTS said, what about ANET? So this is Arista Networks. I've looked at this company, they're on my watch list. Hmm. I really like this stock right here. The growth is phenomenal. Look at this. So they sell products and services. Look at the product sales. It's up 22% at a new record. So the products are at a record, but look at the services. It's up 40%. That's really impressive. 40% year over year growth. And also the net income grew 30% year over year. And the sales were up 25%. So that means they're growing their net margin. So the balance sheet's incredible on Arista Network. So this looks like a great just buy and hold for the long run kind of company. No real reason to ever sell out of them. Let's see. Do hymns. Yeah, we'll check that out right here. Cool. I've been aggressively putting into Hood. Yeah, dude, I really like Hood as well. Oh, we can look at SoundHound AI as well. Yeah, try not to spam. We'll look at them. So here's Hims and Hers. They report earnings on the 5th. So, that's why this company, people like them. They report earnings tomorrow. So tomorrow, the stock is either going to go up or down a bunch. We're really looking at the growth here. I mean, this company has some of the most impressive growth I've ever seen. The sales were literally up 95% from the previous year. So the sales have doubled from the previous year. So incredible growth on Hims, and they're profitable now, making net income every quarter. So, I guess we'll see what happens next quarter. The orange line is kind of what the analysts are expecting. 12 cents of EPS. They have no debt. Also, they literally have no debt at all with 300 million of cash. So I do like them. Let's see here. Oh, Realty Income. Yo, someone said ticker symbol O. If this is a higher yielding stock, you won't outperform the market owning this stock right here. But here's what's so cool about this stock. Like, look at this. They're actually down from 2019, but this company pays a monthly dividend and it's completely sustainable. You won't outperform the market owning this stock, but what you do get is a 5.5% dividend yield that pays you monthly. They're actually known as the monthly paying dividend stock. They're worth $50 billion. They're a real estate investment trust. They're in the S&P 500. So I do like Realty Income. So let's see. Ooh, Osler said, what do you think of CPRX? Yo, if you go to my most recent YouTube video, I just made a video about this stock right here. So if you want to learn more about this stock, go check out my most recent YouTube video. But I'm going to show you why I decided to buy this stock at an all-time high. If I scroll out on the weekly, I literally bought this stock at an all-time high at the time. I didn't mind doing it because the fundamentals are so great here. This is a $3 billion company, and look at the sales growth. This is what's so impressive. Sales are up to a literal new record, up 28% year over year. Monster balance sheet, no debt whatsoever, 500 million of cash. About 30% of the company is just their cash. And the best part is the net income. Net income's at a record in the most recent quarter. Same with the cash from operations at a record. So everything is at a record on that business. So I think they'll just slowly keep on going up. And even if you buy them right now, the PE is an 18. They're trading at 18 times net income. So that's what I like about CPRX. Again, I don't have a huge position in them. Ooh, but here's one. Again, don't listen to me. Check this out. Not financial advice. I'm down 9% all time in here. So, again, I don't sell anything, by the way. I don't have a course book, Discord. I don't got none of that. So someone said AMD stock, though. You know what? Let's check out AMD as well. Yo, Trapper, oh, wait. Yes, sir. We'll look at DCI after this. Remind me. So here's AMD stock. Let's go do some analysis on them. I do own this one. I might be a little biased, but here's the highlights about AMD stock. They're kind of like an NVIDIA competitor. Look at their PC GPU market share. They actually have a 16% market share for GPUs. And this is a main data center play right here. Look at the data center business. I mean, this is impressive growth. The sales are up 69% year over year, literally to a new record. And same with the client business, that's up 58% year over year. So incredible growth there on AMD. Again, this stock has kind of been lacking. Sales are now up double digits, 25%. Operating profit was at a record. And look at the FCF. This stands for free cash flow. Free cash flow was a record $1 billion. So a monster balance sheet again. No net debt on AMD. So I like them. Let's look at DCA. Oh, someone said APH has been killing it. Dude, this has been one of my biggest winners right here. The stock's at an all-time high. Amphenol Group, great company. You're right. We can look at them later if you want me to, man. I love that stock. So what is DCI? Let's check it out. This is Donaldson. I have never heard of this company before, but let's check them out. So let's see. They're trading at 19 times net income. So historically, a very low valuation. What do they do? Mobile solutions, huh? So it looks like they unfortunately lost their growth. Their mobile solutions revenue is down 0.5%. Industrial solutions is down 3. So it's kind of like a mixed bag here. The growth isn't too incredible. So yeah, sales are down year over year, and the net income is down 3%. But it's not all terrible. Like they're still making 100 million of net income a quarter and can still afford the dividend, 1.6% yield easy. What do you think is going to happen with the stock market with Trump? I don't know, but it's been volatile. Hopefully the tariffs get walked back. Here, I'll give you a quick portfolio update. I'll be super quick about this. The market is open right now on Robinhood, which is really cool. Here are all the stocks that we own in here. Thanks for the follow, Marcus. Can you check Bright Future with Uber? Yeah, dude, let's check out Uber Technologies. I got you. Um, and then Yeah, no problem, Trapper. Thanks again for the rose. So here's Uber Technologies. This company is close to an all-time high. I really do like this company. We can see their active users. Their monthly active users are 171 million, up from 150 million. So that's some real good growth there. But look at the mobility business. This is what's so impressive. The mobility business is up 25% year over year to a new record. And same with the delivery revenue. This is Uber Eats. Uber Eats is up 21% year over year. But look at the free cash flow, incredible. They're making 1 to 2 billion of free cash flow every quarter. The net income as well. They're making net income every quarter. Great balance sheet. They're lowering their liabilities. The asset to liability ratio is going down while growing their assets. I mean, everything about Uber looks pretty good right now. So that's a great just buy and hold for the long run, in my opinion. Um, let's see. Oh, yeah, Marcus. Let's see. SERV. So this is a robotics company. To be honest with you, I don't really like Serve Robotics. They're only worth $400 million. So they're kind of a startup right now. So remember, the whole company's worth 400 million, but look at the sales. They only sold $175,000 of product in the most recent quarter. So this is literally a startup robotics company, in my opinion. I just wouldn't buy this company. I don't think there's any value here. They lost 13 million in the most recent quarter. They have a great balance sheet though. That's the one good news. Just from issuing stock, they were smart to dilute the shareholder up here at like $15. But yeah, that's a stock I'd stay away from, in my opinion. Um, let's see. Kevin said, I have a put for Netflix. Yo, that means someone's betting that Netflix is going to go down. And look at that. Netflix is literally at an all time high. It closed at an all time high on Friday. And yeah, I'll give you the good news about Netflix. Here's the valuation is pretty ridiculous. They're trading at 55 times net income, which is really expensive. But check this out right here. They look at their premium subscribers. It grew to 301 million. So 301 million subscribers. They make $11.69 per month per user. But look at the bottom line here. This is the most impressive part. I mean, they're making 2 to 3 billion of net income every quarter, and it's growing 23% year over year. The free cash flow is just as good. So yeah, they're kind of seen as like a tariff-resistant stock. You can't really tariff a Netflix subscription, or hey, maybe you can. I don't know. Let's AUR. What's this one right here? So Aurora Innovation. So let's check this one out. They're a $15 billion company, so they do have a really good market cap. But yikes! Just looking at their net income right here, that's really bad. They're losing 200 million of net income a quarter, and they have no sales right now. So I would absolutely stay away from this company. They don't sell a product. They don't sell a product or a service. They have no sales, and they're losing 200 million a quarter. So there could be some good fundamentals here, but I don't think I could trust my money with that one. That one looks really risky. Oh, I haven't looked at this stock all day. Someone said Nvidia. Yeah, let's check out Nvidia stock, man. So this company just impresses me every time I look at it. Like, look at this company's GPU market share. Nvidia actually has an 18% PZ GPU market share. The automotive revenue is also at a new record right here, 500 million. Oh yeah, hey, if you want to get this app load on, it's in the link tree in my bio. First link there. It's actually a brokerage. But the best part about Nvidia is the bottom line, the net income, the after-tax profit. It was 22 billion in just the last 3 months. I mean, if we zoom out to 2023, they were lucky to make a billion. Now they literally made 22 billion just in the most recent quarter. And at this incredible growth rate, what's it going to be this time next year? They really have a 56% net margin, which is ridiculous. If you go spend $100 at Nvidia, 56 of that is after-tax profit for them. So incredible. And Nvidia is so big. You know what? Let me show you Nvidia's portfolio right here. So Nvidia is so big, they own some individual companies. Yeah, look at that. They own part of ARM. They own some APLD, some Nebius, some RXRX. So yeah, that's kind of an interesting thing about Nvidia. Oh, yeah, we can see like, Warren Buffett just step down from Berkshire Hathaway. He owns a lot of the higher yielding stocks like a Coca-Cola, Chevron. Oil has not been doing good recently. Look at oil stocks like Chevron. Actually, if you're looking for a high yielding dividend stock, check out Chevron. You get a 4.71% dividend yield and exposure to oil. So if you have no exposure to oil, that could be a decent one. I kind of trust Chevron. What does the orange line mean? That's, I think, the year-over-year growth rate. Okay, here we go. Delilah said Target, TGT. So yeah, Target. This is another really high yielding dividend stock, and they trade at like 10 times net income. But look at this: if you buy Target, you get a 4.5% dividend. Payout ratio is only at 50%, so very fair. And look at the PE; they literally trade at 11 times net income. That's what's really weird. Target sells food and beverages, household essentials, furnishing, apparel. But here's why I think they fell. If we look at the revenue was down 3% year over year, but the net income fell 20% year over year. So what that means is they actually lost their margins. Net margins fell 17% year over year. So that's the bad news about Target, but I think they're oversold, honestly. Hey, yeah, try not to spam. I want to get to all the stocks here. Someone's been saying SEHD. Yeah, I haven't looked at SEHD either. This is a dividend growth ETF. It's mainly a higher yielding dividend ETF. They have a exactly 4% dividend yield. So you basically get 1% of your money back a quarter. And yeah, they own a lot of the higher yielding names like a ConocoPhillips, oil stock, Coca-Cola, Verizon, Altria, Lockheed Martin, Home Depot. These are all the higher yielding stocks. Like look at Verizon, for example. This is one, they're the same price as they were back in 2018. But with Verizon, look at this right here. Uh, you get a 6.2% dividend yield. So that's the cool part about Verizon's kind of the high yield you get there, qualified yield. I think Exxon is the better than Chevron. Hey, I like EOG Resources. That's my favorite one. Yeah, let's look at Exxon Mobil real quick. Or XOM. So yeah, this one has fallen a little bit less. So yeah, look at Exxon Mobil's net income. This is crazy. They're making literally 8-9 billion of net income a quarter. Oh, you know what, Jello? My link tree is not in my bio right now. That is actually, you're absolutely right. Um, uh-oh. You know what? I have to go fix that real quick. You know what? Hey, um, hold on a second. Hey, give me a sec here. The screen's gonna go blank for like a minute here. You go use the bathroom or something. Give me just 1 second here. I do apologize. Screen is gonna be blank for like less than 30 seconds. I'm already halfway done here. I do appreciate y'all's patience. Yeah, if y'all want to hit the follow button, we go live every single day, twice a day. Um, we just look at stocks and stuff, and I don't sell anything. I don't have a course book, Discord, WhatsApp, Telegram. I don't got none of that. Oh my gosh, I'm not even logged into my TikTok account. I have to log in through Gmail right now. I'm glad this is not showing on the screen. Um, yeah, hey, we can look at Hims and Hers. Yeah, Hims and Hers reports earnings tomorrow morning. I think before the market opens. So that'll be very interesting. Something went wrong, dude. TikTok. If this doesn't work, if this don't work. Okay, here we go. I'm so sorry. Um, there we go. So the link tree is now in my bio. Thank goodness. All right, I'm turning back on the screen. Thanks for your patience. Yo, we're streaming on YouTube and TikTok right now. So there we go. The screen should be back now. All right. So I apologize. Here, I'll show you my portfolio real quick. Let me know if the screen isn't showing. So here's my main taxable account. The market is open right now. Yeah. By the way, sorry. Yeah. If you want to, yeah. If you go to the link tree in my bio, you can get any of these apps right here. This is my favorite one right here. This is my main brokerage right here. It's where I like to park my idle cash. Let's see. I look forward to your TikTok. Hey, appreciate you, Javone. Appreciate you, man. So let's see. Someone said Delta Airlines, DAL. So I don't really love the airlines because the airlines, they don't really outperform in the long run. And in a recession, the airlines just are gonna get smoked. So yeah, Delta Airlines is the most well-run airline in my opinion, but even still, uh, they're making net income every quarter. That's the good news. Delta Airlines actually makes net income every quarter. All the other airlines sometimes lose money. You get a 1.3% yield, very low payout ratio, just very low valuation on Delta Airlines. But yeah, I just don't love the airlines as a great just buy and hold for the long run. Oh yeah, people have been saying APP. So this is Apple Oven right here. This is a huge advertising stock. So check this out. Y'all won't believe this. This right here, look, 69% of their businesses are advertising revenue, and look at this. You won't believe it. It is up 73% year over year. That's why this company is so loved right now. Just the growth and also the bottom line. They made after tax 600 million of net income. Incredible. The free cash flow was 714 million. So that means they're growing. Look at their net margin, 43%. Yo, this company, I need to add them to my watch list. They're a great growth company. They deserve all the hype. Ooh, here's a really great stock. Someone said Shopify. You know what? That's a classic Kathy Wood stock. You know what? Let me go to Kathy Wood's portfolio right here. She owns Shopify. Yeah, so 4% of her portfolio is in Shopify. Here's why I am obsessed with this company. It's because of the fundamentals here. Look at this. If we just go to the revenue right here, Shopify in 2019 had 1.5 billion of revenue. Now it's 8.9 billion for the full year 2024. The growth on Shopify is incredible, and so are the profits as well. They're making free cash flow. It's up 37%. The net income's 1.3 billion. Actually, that was a one-time adjustment. Shopify, I love that one. Hmm. Airlines getting crushed right now. Yeah, but yeah, hey, yeah, with gas becoming cheaper, that definitely helps them out. Oh yeah, here's the trade desk right here. So this is an advertising company. Actually, the reason they fell is because Netflix used to use the trade desk to find advertisers, but now Netflix dropped them. But I think despite the really good numbers, I think the stock is oversold for sure. I think it's at a pretty good valuation. The revenue was up 22% and the net income was up 87%. That means, and I didn't believe this, that they grew their margin 53%, and that was real margin growth. I mean, that was real net income that they made. So this was so impressive. Free cash flow is like 100 million a quarter. So I really like this company, as long as I can keep up that net income growth. So let's look at United Health as well. And Turk said, I'm up 46% of my HIMS return. Do you think I should keep holding? I bought. Turk, HIMS reports earnings tomorrow morning. So they're either going to go up or down a bunch. Here's the stock I'm talking about, HIMS and hers. This stock reports earnings. Wow, look at them the past month, up 44%. So yeah, they report earnings tomorrow before the market opens. So when you wake up tomorrow, the stock should either go up or down a bunch. So best of luck to you, my friend. Dang, look at that. That looks like in the overnight market, stocks are kind of falling a little bit. We can look at the QQQ. Q is down 0.71. I mean, we did come off a great week though. Yeah. Stocks will most likely be red tomorrow because we had a really green Friday. So let's see. Yeah, if you guys got any stocks you want me to look at, let me know. Someone's been saying United Health Group. Yeah, I forgot to look at that one. My fault. That's my most recent purchase, actually. So my most recent purchase in here is United Health Group. I got 4.1 shares of this company. We actually used their OptumRx right here. So look at OptumRx. This is like a huge growth segment for them. It's up 15% year over year. So that's what I really like about UNH. Just the United Healthcare. It's only up 5% year over year, but 5% on some big numbers is really impressive. They usually make literally 8 billion, 9 billion of net income a quarter. You get a 2% dividend yield with United Health. So yeah. Which Mag 7 do you like the most currently? Yo, I like Google. It's Google or Meta. Google or Meta because they pay a great growing dividend. Amazon would be a third favorite. Amazon's my third. I have been loading the boat on Amazon. Check this out right here. You can kind of see where I've been buying the company. We're just slightly up on them. Amazon, here's where their earnings were actually pretty good. The net income was up 64% from the previous year. So that was kind of the good news. The bad news was they had negative free cash flow because they invested so much back into the business. If we go to the free cash flow right here, this was really weird that I thought that it went negative 8 billion. But that actually isn't too bad. Yo, Ismail said PSN is my company stock. So this person works at this stock right here. Wait, that's really cool. Unfortunately, it looks like the stock has not been doing too good the past couple months here. Hopefully, you don't got stock options. Yeah, what's up, Jake? We'll look at Grab as well. Yo, what's up, Eric and D Rain? What's up, guys? Yeah. We'll look at Google and Palantir. Yeah, Palantir earnings tomorrow. We'll look at that too. So someone here works for PSN stock. Let's go check out the fundamentals here. So they do Federal Solutions. I'm not too sure what that is, but unfortunately, it looks like the sales are down 7% year over year. That might be why the stock is falling. Critical infrastructure, that's up 13%, so not bad. Let's go check out the margins here. So revenue's up 1. And whoa, look at that. They're actually making a lot of net income every quarter, and the net income's growing like crazy. So actually, the fundamentals are actually really good here. They don't pay a dividend. They don't really need to. They're probably doing stock buybacks. But Everything seems pretty fine there. Besides the 1%, the sales were only up 1% from the previous year, which isn't too great. So yeah, Hims reports tomorrow, and so does Palantir. So Palantir is gonna go up or down a bunch. Yeah, what up, Kadu? Yeah, this is my basically second stream since I've gotten back. I haven't been streaming much, but yo, we're gonna be go back to daily live streams. Yeah, if y'all wanted to follow button, we go live every day, twice a day. I'm streaming on YouTube and TikTok right now. So here's the government. Here's the best part about Palantir. They're at an all-time high right now. The government loves them. Nearly every police station uses Palantir's, software. Look at this growth. It's up 41% year over year to a new record. Incredible growth on the government. Same with the commercial revenue. That's up 31% year over year. So Palantir is just a great growth company with no debt. Completely no debt. They have a monster balance sheet. So yeah, yo, what up, Landon? Yeah, if you want to get this app right here, it's in the link tree in my bio. First link there. It's actually a brokerage, but someone said Grab. This is the Uber competitor. So they literally do exactly what Uber does, but if we go to where they do business, it's in all these other countries. Uber, or I mean, Grab does what Uber does in all these other countries right here. And check this out, Uber is actually the largest shareholder. If you look at the top there, Uber Technology owns 13% of the stock. So Uber's the largest shareholder of this company. They're printing free cash flow. They're now making net income every quarter. So I actually really like that company. So if you own some Uber, you own a little bit of that stock. What are your best dividend stocks? Yo, like best performing, this one hit an all-time high, but my highest yielding dividend stock is ticker symbol Cube right here. They've actually had a very nice week on some good earnings. They have a 4.8% dividend yield, and in my opinion, it's completely sustainable. Yeah, you can kind of see where I've been dollar cost averaging into that stock. Again, not financial advice, or you want to make sure you're buying a high quality stock. Always do your own research. So let's see. Saw your video today. Might pick up two or three at InnoData. Yeah, dude, I love InnoData. Yeah, yo, if y'all want to support me, I don't sell anything. Of course, I don't have a book, Telegram, none of that. But I do have a YouTube channel. If y'all want to help me out, go subscribe to my YouTube channel. It's called Nathan Robert. It's also in the link tree in my bio. I'm also streaming on there, so if you missed anything, you could replay it. Yo, here's my Roth IRA, by the way. It's only $700. But one of the stocks I own in here is a great growth company. It's ticker symbol INOD. This is one of my favorite stocks, right? Dividend growth stocks. I believe they have a realistic chance of doubling within the next 1 to 2 years here. They have a $1.25 billion market cap, so they're not worth that much money. They're only worth $1.25 billion, but look at the growth here. This is what I like to look for in a company, ones that are growing their fundamentals at an incredible rate. And this one checks the box. The sales literally up 161%. The agility business is up 24%. They have no net debt. They're making net income every quarter now. Five of the Magnificent Seven are customers. So Google, Amazon, Nvidia, Microsoft, and Meta are all customers of InnoData. Let's see. Let's look at some more stocks here. Yo, what up, Moses? Doing good, doing good, brother. How about you? Yo, Terry said GEV, Veranova. So this is like a clean energy stock, kind of like a nuclear energy company. They're in wind as well. But yeah, if we go to the net income right here, these year-over-year growth rates are really impressive. They're now making like 400 million a quarter if you kind of average it out here. Yo, Ranger John, thanks so much for the rose, dude. Yeah. If you got a stock you want me to look at, Ranger, I got you. I appreciate the rose there. CEG had a crazy week. Yeah, dude, dude, you're absolutely right. Yo, my main nuclear energy stock right here, this company right here owns 50% of all the US nuclear energy facilities. They have had a good week. They're up 23% the past month, or exactly from 1 month ago. They're still down they're up year to date, up 10% year to date. Pretty nice. I'm up 21% on my shares. Does announcing a dividend have a positive or negative effect? Yeah, sure. Like for Google and Meta, when they announced their dividend, since it's completely sustainable, it's great news. Oh, someone said SoFi. Yo, Jake. Yeah, you know what? Let's check out SoFi. Oh, yeah, we were just looking at AMD. Yeah, here's my risk on portfolio. We got some bigger losers in here, like UiPath, Toast. But one of our bigger winners has been like SoFi, Sprouts Farmers Market. You know what? Let's look at SoFi because I've seen a few comments about SoFi Technologies. This is a great fintech right here. I'll be quick about this one because we've already looked at them. But this is the best part about SoFi. They do loans. They're in lending. But the best part is actually the financial services revenue. It's up 85% year over year. Incredible growth of the financial services business. So, and now this company is also profitable. They're making net income every quarter because if we zoom out to last year, no one could really take this company serious. They were losing a lot of money. So you make a great newscaster. Hey, I appreciate you, Ranger John. Thanks, man. Um, let's see. Um, Uh, Duke Energy and Dominion Energy are great in nuclear. Yeah, actually, I'll go to the nuclear energy watch list right here. You know what? Where is it? Yeah, CEG's or that's the quantum. Yeah, here's the nuclear energy stocks. NextEra Energy. I don't really like these too much. Yeah, we can look at Dominion Resources. This one's pretty good too. They have not done too good. They're the same price as they were back in 2019, but you do get a 4.85% dividend yield with this company. 4.85% dividend yield, and they usually make like 700 million of net income every quarter. They had a one-time adjustment last quarter, so yeah. Yeah, hey Morgan, if you want to get this app right here, it's in the link tree in my bio. It's the first link there. It's actually a brokerage. Yo, someone said or MRVL. Let's look at Marvel Technologies. So yeah, this company on their most recent earnings report had a really good report because they finally made net income. Because if you go to the net income down here, usually they lose net income every single quarter. But in the most recent quarter, they actually made 200 million, and that was real net income that they really made. Great news. The sales were up 27%. That was really good growth rate. 27% growth. They have a great balance sheet as well. So that was kind of the good news. I want to see them keep up that net income positivity because they do pay a dividend, and they have not been able to afford the dividend because they used to lose net income every quarter, but now they're making net income, so they can afford the dividend. Um, so yeah, yeah, MRVL looks overpriced because it just went net income positive. So let's see here. Thoughts on USOI? Yeah, so this is a covered call. This company sells covered calls on oil, which is a kind of pretty good asset to sell calls on. So you basically just get a 25% dividend yield. They just sell calls on oil. Mm. So not bad. You get like a monthly dividend. It's one of my more favorite assets to sell calls on. I like selling calls on bonds and oil. So someone said Zim right here. Yo, Jeff Mack. What's up, Jeff Mack? We'll look at Celsius as well. Yeah, that's a great company, debt free. So here's Zim. This company actually has a rule where I think like 50% of the net income they make will be paid out in a dividend. And sometimes they lose net income and sometimes they don't pay a dividend. Like this whole year right here, they didn't make any net income, so they never paid a dividend. But they're finally making net income again. This company benefits from the supply chain issues. And check this out. It says they have a 25% dividend yield. It changes every year. Like, look, in 2022, they paid $27 in dividends, and the whole share price is $15. You got over 100% return in dividends that year if you own the stock. So, yeah, this is basically a dividend play. So let's look at Oh yeah, we can look at Energy Transfer as well. Let me go to the debt-free watch list right here. Jeff Mack said to look at Celsius stock. So they just acquired Alani. I'm curious to see how the acquisition will help out their growth right here, because they did kind of lose their growth, which was unfortunate for them. That's why the stock price, if you look, has like really fallen since $95 because they lost their growth. I'll show you that right here. So look at the revenue. The revenue is down a 5% year over year. And the net income actually went negative. They lost money in the most recent quarter. But they have a really good balance sheet. They can easily afford that small loss because they have no debt. But I'm curious to see how the Alani acquisition will do. Yeah, hey, this is a brokerage right here downtown. If you want to get this brokerage I'm on, it's in the link tree in my bio. It's the first link there. So yeah, this is Energy Transfer right here. This is an MLP. This is the one I'd actually stay away from because this company gives you a K1 tax form. Very few stocks do this because this technically isn't a stock. You're buying units of this company. So because they're an MLP, a master limited partnership, they have an 8% dividend yield. But they send you a complicated K1 tax form, which costed me $300 with an accountant to get it filled out. So in my opinion, I just stay away from that one. But because they're an MLP, you get the nice 8% yield. But I just don't like the complicated tax form, so I don't really recommend that one. No other stock is really like that. Ooh, dude. So someone's been saying Reddit. Yeah, Luffy. Let's check out Reddit. This is one of my favorite stocks. I do own this one. I have a decent sized position, did like 4 shares or something. Yeah, I'm up 16% on my Reddit shares. You know what? I'll be really quick about this. A lot of people think this is a meme stock, but forget that the name is Reddit. Look at the sales. The sales are up 71% year over year. That's incredible. Like, just forget that the name's Reddit. And on top of that, Reddit has no debt. Look at this balance sheet. They literally have let's see how much cash they have. 1.9 billion of cash with zero debt whatsoever. So Reddit, I do own them. I might be biased, but I love the growth there. I mean, it's ridiculously good. So I'm shifting to a lot of dividend players. Would you pick between O or Main? I would pick both of those. Yeah, dude, Main Street Capital sometimes pays twice a month, but Realty Income is just so sustainable. What's Reddit selling? Reddit is they're like a social media app. I've read an article. Reddit makes $5 per US user somehow. I don't know how. Maybe it's just my advertising. So, like, let's see. Oh, I also want to look at this stock right here. Let's look at Realty Income and so this is. Sorry, there we go. So this is Realty Income right here. This is known as the monthly paying dividend stock. So they actually have a 5.66% dividend, and it's completely sustainable because they're a real estate investment trust. They have to pay out most of the income they make in the form of a dividend by law. So this is the number you want to look at. They made 971 million in the most recent quarter, and the dividend only cost 691 million. And if you're like that payout ratio still seems kind of high, that's because it has to be because they're a REIT. It's actually very sustainable. So anyway, I like that. I like Realty Income. Ooh, so let's see. I'm up a good portion on IONQ. So this is a quantum stock, I believe. So this is IONQ right here. Yeah, look at that. They were up 13% the most recent day. I like this one because of the growth. If we look at the sales right here, the sales are up 91% year over year. So the sales have pretty much doubled from the previous year. But again, I don't. The sales are only 11 million. It's like not that much of sales. So the sales were 11 million. Yes, up 91%. That was so impressive, 91% growth. But look at the net income right here. This is the kind of unfortunate part. I don't know how, but they lost 200 million in the most recent quarter, 50 million the quarter before. So I just be careful with this one. They have a really, really good balance sheet as well. I believe that's is that in the aerospace industry? You know what? Tesla's a ASTS Aerospace, I mean. Or no, let me go to, yeah, here's the quantum stocks right here. You know, my favorite quantum stock is honestly Google and IBM. They have the best quantum chips, but oh yeah, there's IONQ. Yeah, IONQ. There she is. I'm scared for the SoundHound AI earnings. Yo, let's go see when SoundHound AI reports earnings. You know, tomorrow we also get Hims and Hers and Palantir earnings. We'll be streaming tomorrow for that. Yo, what up, Bailey? Yo, Reddit selling their content to AI developers. Oh, that's actually, you're right, Jeff. Thanks for that. And yeah, we'll look at Archer Aviation as well. So here's SoundHound AI. They report earnings this week on the 8th. So in 3 days on Wednesday, they report earnings. Here's the thing I like to watch about SoundHound AI. It's their subscription business. Look at this reoccurring revenue right here. I mean, this is incredible growth. A year ago, it was 600,000. Now it's 30 million in the most recent quarter. And you know, with this growth rate, what's it going to be this time next year? But there is some bad news. So yeah, the sales are up 101%, but look at this net income. They actually lost 258 million in the most recent quarter. So that's a huge net income loss. I'd really like to see them get closer to profitability. But see, here's Arch Aviation. I honestly, you're not gonna like my thoughts on this company. The stock's done pretty good though. You know, they're up 10% the most recent day. But here's why I would not buy this stock personally. Because if we go to revenue right here, when I click on revenue, you see how it says no data. That's because this company has never sold a product or a service. This is a startup. They've never sold a product, a service. They have no revenue, and this company loses 100 to 200 million of net income a quarter while selling nothing. So in my opinion, unless they start selling something quickly, I would stay away from that one just because of the huge net income losses there. It doesn't. Ooh, here's a cool stock, DECK. So this is Decker Outdoors. This company just sells a bunch of shoes. They just sell a commodity. They just sell shoes, but they're really taking market share from Nike. Let's see, they own Uggs. So if anyone's heard of Hoka, like a running shoe, Hoka, and the Uggs, like the boots, UGG is doing pretty decent. Let's go check out the net income right here because that's what matters. So wow, look at that. They're making a lot of net income now. 456 million in the most recent quarter. So actually Decker's this one might even be at a good valuation. Yeah, they're trading at 18 times net income. Unfortunately, the whole industry is kind of getting whacked right now. Like look at Nike. Yo, Nike is at the 2015 price. So if you bought Nike in 2015, you'd be flat on your money. So unfortunately, uh let's see. Um, Ford also reports earnings tomorrow. And Celsius Tuesday morning. Yeah, we get some cool companies that reports earnings next week. So yeah, here's Ford Motor. This is one I don't really love. You know, if you bought Ford in the year 1999, you'd be down on your Ford position, unfortunately. But now this one's seen as like a dividend play. If you buy Ford, you get a 7.6% dividend yield, which is pretty great. So yeah. Um, Show your stocks, please. Yeah, hey, if you want to see every stock that I own, go check out my YouTube channel. I just did a whole entire stock portfolio update. You can see every stock that I own, how much I'm up and down on them. Yeah, here's my main taxable account, by the way. We're down 2% year to date. This is my dividend portfolio. All these stocks are in the S&P. We got Google, Meta, United Health, United Rentals. So, oh yeah, here's our small Roth IRA, our small $700 Roth IRA. So yeah, let's go look at some more stocks here. Can you check out Google? Yeah, let's check out Google. My bad. Let's go check it out, Eric. Thanks for being here. Yeah, we're streaming on both the YouTube and the TikTok live. I'm reading both chats. Thoughts on Shelf or Shell? Yeah, well, is Shell the oil stock? We can check them out as well. They're not. They're a Dutch company, I believe. So here's Google right here. You know, this valuation is what I love about Google. They're literally trading at 18 times net income. So, very fair valuation. And they just had incredible earnings. The revenue was up 12%, but the net income was up 45%. So, this is a real story of margin expansion. Google just grew their margin to a 38%. Incredible growth, and they own a lot of businesses. They own um, YouTube, they own Android, they have the Google Cloud, they own Waymo, they have a quantum chip. They have Gemini. Like, look at just the Google Cloud, just one of their little businesses here. It's up incredible growth there. So yeah, Google's one. You just buy and hold that one for the long run. No real reason to ever sell them. Oh yeah, hey, if you want to get this app right here, it's called Moomoo. Yeah. Thanks for that, Jello. It's actually a brokerage. It's a let's look at BIVI. What's this company right here? So BioV. I've not heard of this stock right here. But let's check them out. So unfortunately, this is one I would definitely stay away from. They're only a $22 million company. So this whole company's worth $20 million. And look at that. They have no sales. They've never sold a product or a service. And they're losing millions every quarter. So your whole company's worth $22 million. And they lost $7 million just in the most recent quarter. So I would absolutely stay away from that one. It looks just extremely risky. Maybe a fun swing trade or something. But yeah, that one looks really risky, Paul. ODFL. Let's check them out. Yo, I'm not sure what Al Train is. Jake, if you give me a ticker symbol, I'll check it out. So here's ODFL. This is a less than truckload company. I see their trucks everywhere. It basically just ships ship stuff in trucks with ODFL. This is a dividend growth company as well. You get 0.7% dividend yield. Look at the dividend growth since 2020. They've 3x the dividend since 2020. The PE is a 30, which is pretty fair. And look at that. So the sales are down 5%, the net income's down 12. So yeah, they did lose their growth a little bit, but still they're making 300 million of net income every quarter. They can easily afford the dividend, but that's probably why the stock price has been kind of suppressed recently because of the slow growth there. So yeah, someone said NEE, NextEra Energy. So yeah, if we go to the nuclear energy stocks, that's one on here. This company owns Florida Power and Light. The huge utility business in Florida. And look at this. This is a nice dividend play. You get a 3.15% dividend yield. So, which is pretty cool. And 25 PE, pretty fair. Yeah, look at that. 63% of their business is Florida Power and Light. And yeah, if we look at the operating profit, they usually just make around 1 to 1.3 billion of net income every quarter. So yeah. Yeah, hey, if you want to get this broker, it's in the link tree in my bio. It's the first link there. It's called Moomoo. But anyway, let's keep going here. Oh, there's an interesting one. QXO. It's the company behind United Rentals. Ooh, they're only worth $6 billion. So they're like 1/10 the size of a United Rentals. This says they do service and other. So I don't know if this is like a United Rentals. Let's see here. So the revenue is 14 million. Yeah, so it looks like this company isn't really look at this weird balance sheet though. The assets just grew like crazy. I don't know what happened here. Like the numbers look kind of weird here, but I don't know. I got to do some more thoughts on them. Oh, here we go. MO right here. Oh yeah, we got to look at Shell as well. So this is basically a high yielding dividend stock. This is one of the most sustainable high yielding dividend stocks out there. So if you buy MO, you get a 6.8% dividend yield, and the payout ratio is only a 61%. So you actually even have room to raise the dividend. So even if you buy the stock at all-time highs, you should still get 6-7% returns in tax-free qualified dividends, which for me is tax-free because I make under $70,000 a year. But yeah, let's look at AMD as well. Yeah, I love AMD. So this is one I do own. I might be biased on them. I'll be quick about this one. Here's their PC GPU market share, 16% exposure to GPUs with them. This is a main data center play. Check out the data center business on AMD. It's up 69% year over year, literally to a new record. So incredible growth there. Same with the client revenue. It's up 58%. So the revenue's up 25%. They actually had a record operating profit quarter, record free cash flow quarter, $1 billion of free cash flow. They have a monster balance sheet. So yeah, AMD is a great, fundamentals play. Yeah, no problem, Eric. I appreciate you. Oh, someone said NOW. So this is ServiceNow right here. Yeah, they're kind of like a Salesforce competitor. They're a software. The growth here is the best part here. Actually, let me go to it down here. So if we go to, oops, go to revenue, the revenue is up 18% year over year. It's like really incredible growth here. If we go to like on an annual basis, yeah, full year 2024, you can kind of just see the revenue hits a new record every quarter. And so does the net income. They're making like they're making 400 million of net income a quarter. What about free cash flow? Wow, 1 billion of free cash flow a quarter pretty much. So yeah, ServiceNow, they're a huge software company, kind of like a Salesforce. AMD will be a cash cow over the next 5 years. Yeah, I hope so, Javone. Me too. Let's see. Should I abandon ship on Tubo? Wait, you mean Fubo? Wait, let me know if you're talking about Fubo. Is that actually a stock, Tubo? I think you mean Fubo TV. What is PONY? What's this one? Pony AI. So, $3.7 billion company. Let's check them out. So, virtual driver operation services. So, hey, that sounds niche. Actually, it looks like the sales were doing pretty good, up 64%. Engineering solutions is down. Well, let's just go look at we only get 1/4 of revenue here, so I don't have much data on this stock. I do apologize here. It looks like they just IPO not that long ago. So hey, yeah, I don't know about that one. And what did I just click? Oh no. Okay, the live stream is still up. Okay, good. Um, yeah, I appreciate y'all being here. Yo, we're streaming on both YouTube and TikTok. Oh yeah, well, let's look at Fubo TV. This company, unfortunately, has not been doing too good ever since they got 80% acquired by Disney. Disney owns all the voting rights to this company now. Let's see. Wow, look at that free cash flow for Q1. 157 million of free cash flow. Very impressive. What about net income? Did they make net income? That looks like a one-time adjustment. Yeah, it was. So that wasn't real net income because the operating profit was negative 25 million. Maybe that was like Disney giving them money. Um, yeah, that's probably what that money's from. Maybe it's from Disney. I'm not too sure. But yeah, this is yeah, I don't know. I wouldn't really want to own this company. I know they dilute the crap out of you with stock-based comps. So, well, let's look at HMC. What is this company? So, Honda Motor. This is a Japanese company. So, I think Honda might be partnering with Waymo. Maybe I'm pretty sure it's Honda. We can see their automotive sales. Or let's just go to the bottom line right here, the net income. So look at that. They usually just they're making net income every quarter, which is the good news. They usually make 2 billion of net income every quarter. So not bad. Do they pay a dividend? Look at that, a 4.4% dividend yield with a 30% payout ratio. It looks like that's pretty sustainable. What's the PE on this company? They're trading at 6 times net income. So yeah, that's why the dividend yield is so high because the valuation's so low. Ooh, someone said Tesla, please. Yeah, let's check out Tesla. Um, hey, Ulysses, what's up, dude? Buy, put it over. Yo, ooh, yeah, Palantir reports earnings tomorrow. There should be a lot of volatility around them tomorrow. So here's Tesla right here. There's honestly there's not too much good news for this company. They're trading at a super expensive 164 times net income. And look at the automotive business. The automotive sales are actually down 15% year over year. So they have a really high valuation and they lost their growth. But there is good news. Look at their energy and storage business. This is incredible. It's at a new record. I mean, look at this growth. So the energy storage is doing good, but it's only, 15% of the business. The net income fell 70% year over year. So honestly, I'm just kind of staying away from Tesla just because the valuation is so high. The valuation is too high for me. Like especially compared to a Google or Meta, dude. Google and Meta look dog cheap. What is this company? SNPS. So this is Synopsys. I haven't heard of this stock before. 70 look, they've done really good though since 2019. $73 billion company. What do they do? Design autonomy or automation. So that actually sounds kind of cool. So they're in automation. They do a billion of quarter there. Digital and intellectual property. What about the net income down here? So the sales are actually down. So sales are down 3%. Net income is down 33% year over year. Yeah, that's real. So that's probably why the stock has kind of been falling, but they really haven't fallen too much. They're kind of just flat from 1 year ago. So they're still making net income every quarter, but I do want to see the growth come back. Ooh, yo, what up? Crypto Pong said UNH stock. So yeah, that's actually my most recent purchase in my main account right here. This is my Robinhood portfolio. Market is open right now. Fortunately, looks like stocks are going to open red tomorrow. The Qs are down almost 1%, but United Health Group, I got $1,600 in this stock right here. I'll be quick about this company because we've already looked at them, but I appreciate you being here on the YouTube stream. I'm reading both the YouTube and the TikTok chat. I'm reading the YouTube chat first. But yeah, United Health Group has a 2.10% dividend yield, 50% payout ratio. So they have a lot of room to grow the dividend. They're trading at 16 times net income. And we use their OptumRx. Dude, look at the OptumRx business growth. It's phenomenal. It's up 15% year over year. So yeah, United Health Group, I think that's a great just buy and hold for the long run. You get the nice dividend. Synopsys is a big player in AI. Ooh. Oh, yeah. What up, Kevin? You said let's look at Palantir. Yeah. Let's. I sold off Fubo for a profit. Bad earnings report. That was my decision. Hey, Jeff Mack, you definitely sold it for higher than what it is today. Yo, Ulysses, no way, dude. Thanks so much for the 22 roses, man. I really appreciate you. If you got a stock you want me to look at, yo, Ulysses said Palantir put. So yeah, here's Palantir stock. They're at an all-time high today. So they better beat on earnings or else the stock's going to fall because they trade at a stupid valuation. Actually, if we go to the price to sales, this company trades at 101 times their sales, not their profit, not net income, but 100 times sales, which is really, it's just extremely expensive. I can't pay that, but they do kind of deserve a premium valuation. I mean, look at the government revenue. You know, a lot of police stations use Palantir. It's up 41% year over year. So incredible government growth. Just incredible growth here. The commercial revenue is up 31%. So, and they have no debt. Palantir's a debt-free company with, let's see, 5.3 billion of cash. I mean, like a cash cow right there. They make interest on their cash. Yeah, they're in my debt-free watch list right here. Yeah, every stock that you see in here has no debt, like Zoom, Pinterest, Duolingo. Hey, if y'all been listening to the live streams, I've always been saying Duolingo is gonna do great, and Duolingo just hit an all-time high. So, let's see. Oh, yeah, what up? Let's look at Nvidia. Yeah, we haven't looked at Nvidia in a while. So let's check out this stock right here. So Nvidia, huge GPU market share for this company. Again, they have an 18% GPU market share. Automotive business is at a new all-time high. But the best part about Nvidia is the bottom line here. They made 22 billion of net income. I mean, just in 3 months to make 22 billion is ridiculous because back in 2023, they were sometimes lucky to make a billion a quarter. So yeah, incredible growth there on Nvidia. So and Nvidia is so big that they literally own some individual companies. Like if you go to Nvidia's portfolio right here, they own part of ARM, APLD, Nebius. So ooh, someone said I chose Pfizer over United Health. Those are two completely different business models. Yeah, but Pfizer owns a lot of prescriptions. Like if you've heard of Viagra before, Pfizer owns some of them, or they own Viagra. This is a huge dividend play. Look at that. They actually have a 7% dividend yield. And the net income's been a little choppy recently. Like sometimes it goes negative, but they just need to keep up this net income positivity. So, ooh, ASML. Yeah, this is the chip making manufacturer. So, this company actually just reported earnings, had a really good quarter, but the stock has been so suppressed recently. Look at that. This stock used to be over $1,000. This is a nice dividend growth company as well. You get a 1% dividend yield with this company, basically, and they changed their dividend. Oh my gosh. Oh, dude, TikTok making me fill out the AFK. Okay, we're back. Um, So yeah, ASML, if we go to the net income right here, great quarter. The net income doubled from the previous year. They made 2.5 billion, so incredible net income quarter. And that's the weird part. The fundamentals are at an all-time high, but the stock is like at an all-time low or a 5-year low. So I honestly think ASML, again, not financial advisor, I think it looks really undervalued. Again, don't listen to me. I'm not an expert. Always do your own research. Can you explain why InnoData was flat since 1999? Yeah, Katie, they finally just started getting contracts with them within the past couple years here. Katie, if you go watch my most recent YouTube video, I did a whole analysis on InnoData. It's the very first stock. Here, I'll show you the stock I'm talking about. This is one of the two stocks I own on my Roth IRA. Yeah, I don't sell anything. As you know, I don't have a course book, Discord, WhatsApp, Telegram, but I do have a YouTube channel. So if y'all just want to support me, please go subscribe to my YouTube channel. It's called Nathan Robert. It's in the link tree in my bio. I'm streaming on there as well. You can replay the live stream. But here's the best part about this stock right here. The sales are up 161%. I mean, this is incredible growth. Because for the longest time, the sales were just flat, 40 million, but it's just recently exploded. So they finally got contracts. I do a whole analysis on this stock right here in my most recent YouTube video. They have no net debt. They're finally making net income every quarter. So, hey, what up, Tyler? He said, let's look at Rocket Lab. And someone said, will tariffs affect Palantir? I don't really think tariffs will affect Palantir because it's like a software. So there's another Nathan Robert. No, Darla, this is my only TikTok account. My only TikTok account is Nathan Robert. Watch out for people impersonating me. I'll never DM you. I won't, not in a mean way. I'll never follow you. Um, But let's go look at Rocket Lab right here. Yeah, watch out for people impersonating me. So here's Rocket Lab right here. Here's the most impressive part. They have a 1.3 billion backlog of orders that they haven't fulfilled yet. And look at their current space systems revenue. Incredible. It's $90 million, up 75% year over year. So incredible growth on Rocket Lab's space systems business. I would still be a little careful here. I wouldn't put a huge chunk of my portfolio in this stock because they are still losing like 50 million a quarter, but they can easily afford it. Um, you know why they made it on TikTok when you have yeah, oh, here's Adobe right here. So this is a great software, dude. I'm on an Adobe product like every day. I'm either on Photoshop, After Effects every day. Don't tell Adobe though. I have the hacked version. But anyway, let me show you why I love this company. They're trading at 25 times net income, which is extremely cheap for a software company like this. And look at the free cash flow. They make over 2 billion of free cash flow a quarter now. The net income is just as good. They make 1.5 to 2 billion of net income every quarter now. Here's their digital media revenue. I mean, look at this on an annual basis. It's at a new record. Same with the digital experience. It's up 10% year over year. So Adobe, that's I think going to be a winner in the long run. The stock's kind of been hurt right now because they think generative AI is going to hurt Adobe, like Photoshop, which I can understand. Yeah, I do like that one, Crypto Pong. Oh, someone said Coca-Cola. You know what? That is a Warren Buffett approved stock. You know, Warren Buffett just stepped down as the CEO of Berkshire Hathaway. But if we go to Warren Buffett's portfolio right here, 10% of his portfolio is in Coca-Cola. And here's what's so impressive about this stock. Even at all-time highs, this company still has a 2.8% dividend yield. You can basically get 3% of your money back a year with Coca-Cola just in the dividend. They make like they had a really good quarter. They made 3.3 billion in the most recent quarter. So yeah, they just make 2 to 3 billion. Their stock's at an all-time high. Yeah, congrats if you own them. The stock is literally at an all-time high. So let's see right here. What is this one? What up? Alex said AMBA. What's up, dude? So this is I haven't heard of this company. Ambarella. So $2 billion company. They're not that big. They're a $2 billion company, but not bad. Let's check out the fundamentals here. So development and sale of something of low power AI based processing and video image blah. So the sales are up 62% year over year, which actually isn't bad right there. So yeah, look at that. Sales are up 62%, but they're still losing net income. But the losses are narrowing. They only lost 20 million in the most recent quarter. Honestly, things aren't terrible here. They have a really good balance sheet. So as long as they can keep up the sales growth and get net income positive, that company's not too bad actually. They are trending in the right direction. Uh, yo, Don Jar, what's up? He said OSS. Let's check this out. So, One Stop Systems. Yeah, this one looks extremely risky. If you look in the top right, this whole company is worth $50 million. So that's a very small market cap. 50 million. You know, I don't think I could trust my money with that company. Bressner. I'm not sure what that is, but the sales are 8 million. Yeah, like these are nothing. Yeah, the sales are 15 million, and they lose a couple million a quarter. So nothing's really blowing me away here. They're only worth 50 million. They lost 3 million, which is, 6% of the company they lost in the most recent quarter. So I don't think I'd buy that one. I'd be careful. Yo, Golf John 79. Dude, thanks for the roast, dude. If you got a stock you want me to look at, let me know. I got you. And yo, thanks, Francisco. Yeah, I just try and show you the numbers for yourself. Hopefully you can draw your own conclusion. This is the financial advice. Oh, here's a great bank right here. Probably the best bank out there. JP Morgan, too big to fail. If you buy this stock right now, you get a 2% dividend and the payout ratio is only at 25%. So they could easily double their dividend to a 4%. They just choose not to. They make so much net income. It's crazy. They literally make like 13 to 15 billion of net income every single quarter. So, yeah, and the nice dividend. That's a great dividend growth company. I just buy and hold that one for the long run. Um, do you look at crypto? Not really. I don't really look at crypto. I don't actually own any crypto, and there's not much for me to look at. Dang, bro, I kid you not. Something just ran on my foot. Oh my good. I just turned on my flashlight. What was that? Okay, sorry. Someone said Wendy's. So unfortunately, Wendy's has lost all growth. Dude, I don't know. There was like a bug or something on my leg. I don't even know. But anyway, here's Wendy's right here. This looks like a bond, unfortunately. Wendy's is the same stock price as they were back in 2017. And this is mainly a dividend play now. Like, look, you get an 8% dividend, but the payout ratio is now over 105%. So, unfortunately, Wendy's can no longer afford the dividend, which is very unfortunate. Yeah, net income's down 6% year over year. McDonald's is the real winner. McDonald's got the Minecraft movie meal, Wendy's didn't. So, yeah, I'd be I'd be careful. What is a monopoly or duopoly stock? Yo, Visa and Mastercard, payment processor monopolies. They're the only two. Pretty much. I mean, Visa straight monopoly. Yeah, hey, just go to the DOJ. The DOJ is investigating Visa for being a monopoly, and Google. They say Google has a monopoly on like Google search. Yeah, Visa is a great dividend growth company. Look at Visa's net income. They literally make 4 to 5 billion mm, of net income every quarter. So incredible. Oh, sorry. Oh, yo, let's see. How about Applied Materials? Yo, what's the ticker symbol for that one? If you let me know, I'll check it out. Until Wendy's bring back the good deals, I'm not going. Yeah, dude. McDonald's really has the best deals. They got the $5 meal deal. McDonald's has the buy one get one for $1. Yeah, here's my McDonald's position. McDonald's is a royalty real estate company. If you go spend $100 at McDonald's, 4% of that goes back to the parent company as a royalty. And yo, Francisco, thanks so much, dude. Francisco, thanks so much for the 10 roses, man. I really appreciate you. So, yeah, McDonald's, I'd rather buy them. You get a smaller yield, but McDonald's is super safe. Oh, AMAT. So here's Applied Materials. Yeah, let's check it out. So I know this one is a nice dividend growth company. Let's see. So yeah, you get a 1% dividend yield with this company, and the payout ratio is only a 17%. So they actually have a lot of room to raise the dividend. The PE is at 20. They're trading at 20 times net income. That seems fair. So here's the bad part. So it looks like their net income, thankfully this was a one-time adjustment. So you see it says their net income fell 41%. That wasn't actually real, thankfully, but yeah, look at that. They make like 1 to 2 billion of net income every quarter. So that's why they can easily afford the dividend. Nice. Can you let me know what you think of what's Defiance leveraged? Oh, MSTR ETF. So yeah, this is a covered call ETF. This company just sells covered calls on MicroStrategy, and that's kind of a good asset to sell calls on because it's you get a high premium, but you're not going to outperform the market owning this company. Like, look, yeah, you get the super high monthly dividend yield, but you're down 20% the past year. So, I don't like the covered call ETFs. I'd prefer to just sell calls myself, because they have a really high expense ratio and stuff like that. But it's not terrible. If you're just trying to maximize dividend income, that one's not too bad. Someone said NOK. Is that Nokia? Wow, yeah, dude. I didn't even know Nokia was public, so check that out. So unfortunately, Nokia, yeah, their stock was way higher back in the year 2000. This was they were like 4 or 5 times higher than where they are now. But the stock has done pretty good the past year. If you check that out right there. Let's see. So mobile networks, network infrastructure, cloud and network. But let's go look at the bottom line here. So the revenue is down year over year, but yeah, look at that. The net income's a little choppy. Like they lost net income in the most recent quarter. So, nothing's really blowing me away here. They have a dividend, a 2.8% dividend yield. They can even afford to raise their dividend a little bit. But the net income honestly just looks a little choppy. Like they lost money in the most recent quarter. So I'd be careful with that one. I'd probably rather just own like an Apple or a Google. What is Cantor Thoughts? What is Cantor? I'll type it in for you. Cantor. Is it CEP? Let me know if you're talking about CEP because that stock looks weird. Oh, here we go. Wait. Morgan Stanley. Yeah, this is another bank right here. Yeah, we just looked at JP Morgan. Here's Morgan Stanley. This one's also done pretty decent the past 5 years here. What's their dividend? So yeah, look at that. You get a 3% dividend yield with Morgan Stanley. What about the dividend? I mean the net income. Yeah, look at that. They're making 3 to 4 billion of net income every quarter. So yeah, that's pretty nice. And the dividend payout ratio seems sustainable. I think I'd still rather buy a JP Morgan, but not bad. They're definitely their dividend's definitely safe. So here's NVO. This is the Nova Nordisk. This is the company that owns Ozempic. If you've heard of that, like weight loss prescription, this is the company that owns it, and they just partnered with Hims and Hers. Unfortunately, the Ozempic patent expires in 2027, which is unfortunate. But they're trading at such a low valuation, 20 times net income, super low. You get a 2% dividend yield with a lot of room to raise the dividend here. And if we go to the net income, it's incredible. They're making 3 to 4 billion of net income every quarter. So very nice. Oh yeah, someone said BYD. Yeah, Alex. So this is BYD. This is the Chinese Tesla competitor. If we didn't have tariffs on Chinese cars, I mean, their cars would be all over the US because they're cheap and they're good. And look at this, the stock is at an all-time high. It has crushed Tesla. They make a lot more net income than Tesla does. And even Warren Buffett owns a lot of this company. Warren Buffett in Berkshire Hathaway is a big shareholder of BYD. So that's interesting. What? Yeah, hey, if you want to get this app right here, CryptoPong, I think it's in the link in the description. It's called Mumu. It's in the link tree in my bio. But you're on the YouTube stream. Yo, I'm reading both the YouTube and the TikTok chat. Yo, Devin said Meta stock. Yeah. This is a brokerage right here, actually. If you want to get it, link tree in bio, first link. It's called Mumu. But here's Meta Platforms. Here's what's so crazy about this company. It's the super cheap valuation. Meta is trading at 23 times net income. And look at their active users. Meta has 3.35 billion daily active users. So half the world is on their app at least one time a day. The net income's ridiculous. They just made 16 billion of net income, up 35% year over year. The earnings were very solid, very good. And they're investing in the future as well. Cash from investing was 20 billion. So yeah, Meta's a great dividend growth company. I think you should just hold for the long run. What up, user BTI? So yeah, British American. Yeah, so this is another great dividend growth company. So look at that. You get a 6.75% dividend yield with this company. So yeah, we can kind of see all the stuff that they sell here. Yeah, look at the net income. Um, that looks weird. Looks like they had a little one-time adjustment there where they lost 4 billion. But yeah, if you look at that, they usually just make like a billion of net income every quarter, and that's where they pay the dividend from. So hey, not bad. TTWO was having a great week until GTA 6 got delayed. Did it get delayed? Is that what the news was? So check this out. Take-Two Interactive. This is the company that owns GTA 5, GTA 6. They own Rockstar Games, which is Red Dead Redemption. The stock hit an all-time high, and then they said that I guess GTA 6 was going to be delayed, and the stock fell right here. So yeah, it's a very interesting stock though. They're doing great. They're pretty close to an all-time high. So yeah, right now the revenue is down year over year. They have no growth, but that's because they haven't released that big game yet. So yeah, we're really just waiting for GTA 6. Yo, ABC said ESTC. What's this one? ESTC. So this is Elastic, huh? They're a $9 billion company. They actually have a decent market cap. So let's see. Are they profitable? Is the question. So no, they're not profitable yet. Yeah, that was a one-time adjustment. So they've never made any net income, but the sales are doing great. The sales are up 17% year over year. Um, hmm. Cash from operations is up 68%. Actually, that's not bad. That's actually pretty good. I just want to see this company finally make some net income because yeah, they are losing money every quarter right now, but they're not terrible. Not terrible. MSTY is good for the dividend. Yeah, you buy that one to maximize your dividend income. You won't outperform the market owning that one, but yo, Athena said thoughts on just buying and holding the S&P 500? Yeah, the VOO, great thing to do historically. If you just buy and hold this ETF, you should just get 8% of your money back every year. And then when you compound that, it really adds up over time. Like here's kind of the game. You start with $100 and then at the end of the year you got 108 and then you go from 108 to 125 and then 125 to 190 or it just compounds up like that. So that's what I like about the S&P 500. Can't go wrong just buying and holding that. Again, not financial advice here. I'm definitely not an expert. And by the way, I don't sell anything. I don't have a course, book, Discord, WhatsApp, Telegram. Watch out for people impersonating me. I'm actually about to end the stream here. But I'll look at a few more stocks here. I do really appreciate y'all being here. If y'all want to support me, the only way to support me is subscribe to my YouTube channel. I'd really appreciate if you hit the subscribe button. I just made a video about 5 stocks that have a realistic chance of doubling. I made it today. So if you want to just help me out, go watch my most recent YouTube video. I give you a real reasons on why those stocks I believe can double within the next 2 years here. So here's a high yielding dividend stock that's absolutely sustainable. So this is Ares Capital. They're a BDC. So literally by law, they have to pay out most of their income in the form of a dividend by law to avoid taxes. They have a 9.3% dividend yield and it's completely sustainable because they're a BDC. This does not pay a qualified dividend though. They pay a non-qualified dividend. So it's taxed at short-term capital gains, but it's still worth it for that 10% yield. So can I start with $1? Yeah, dude. Or wait, 1 mil. Yeah. What's up, this? What's up, dude? ONON. What's this one? So this is On Holdings. Yeah, this is another shoe company. They just own a bunch of shoes. So yeah, look at that. 95% of their business is shoes. I forget what brand they own, but yeah, they're really taking market share from Nike. They're making net income every quarter now, which is great news. Yeah, they make like 50 million of net income a quarter. The sales are up 35%. So, you know what? I think they own, let's see. I'll check it out for you. So they own, it's not telling me the brands. You know what? I don't care. Um, let's see. Um, Check out REITs like DLR and Cold. So let's check out Cold right here. Oh, yo, what up, Kenji? Yeah, we can look at Nintendo as well. Yeah, what's up, dude? So here's Cold. This I didn't even know this was a REIT right here. Let's check them out. So yeah, look at that. You get a 4.5% dividend yield. You don't look at the net income. Wait, so they are a warehouse REIT. So it looks like they own a bunch of warehouses. Let's see how that's doing. Here's the warehouse revenue. That's flat year over year, but that's not bad actually. And let's see. You really want to look at the cash from operations. Yo, Will. Yeah, hey, if you want to get this app right here, Will, it's in the link tree in my bio. First link there. It's actually a brokerage. So they're actually not doing too bad. Uh, what's the best stocks to invest in? Not financial advice. Yeah, I like I like Google, Meta, Amazon. Yeah, the S&P 500. So let's look at let's look at Nintendo. So have y'all heard of the Switch 2? The Nintendo Switch 2 is about to come out. It's gonna cost a lot of money, but look, Nintendo stock is literally at an all-time high. This is the only way to get exposure to Pokemon. Nintendo owns 10% of Pokemon. It's the only publicly traded stock. You can kind of see their annual playing users right here. The net income's incredible. They're making net income every quarter. So when they released the Switch 2 and all the new games, it's supposed to be a huge revenue driver for Nintendo, and the stock's kind of pre-running that. It's at an all-time high. They're a Japanese company, but yeah, they license out the Mario brand and stuff. Yeah, Nintendo's nice. Are you looking to pick up CEG anymore? Yeah, I'm not looking to pick up any more unless I'm negative on my position again. They own the On brand. Oh, okay. Have you seen Hims lately? So yeah, this company reports earnings tomorrow. So tomorrow after the market closes, this stock is going to report earnings. They're either going to go up or down a bunch. The implied move is like a 15%, so they're going to go up or down 15%, which will be fun to watch. This is a debt-free company, literally no debt and incredible growth. This is what I'm really going to look for. The sales are already up at 95% from the previous year. This is an incredible growth rate. So I'm curious to see what it'll be next quarter. They're making net income every quarter. They're making free cash flow every quarter now. So Hims has really turned things around. They're on my debt-free watch list. You know what? Here, yeah. Hopefully you found a stock or two you can add to your watch list. Here's my debt-free watch list right here. Like all these stocks have no debt, like DocuSign, Duolingo, Pinterest, Opera GX browser. If anyone's, I keep getting ads for the Opera GX browser. They're public stock. They're only worth like a billion. Zoom, Reddit, Celsius, Yelp, Powell Industries. Powell Industries, this is one of my bigger winners. They report earnings on the 6th. So in 3 days, we'll get earnings on that one. My friend AI. Yeah, are you talking about the C3 AI? So they have a really nice ticker symbol AI. But here's the thing about this company. You know what? If we go to the net income right here, here's the bad news. They're still losing a lot of money every quarter, like 50 to 80 million. Not too terrible because they have a really great balance sheet. Look at that. Like they have no debt, lots of cash. Let's see how much cash actually. 730 million of cash. So yeah, they have a lot. They have multiple years of cash left to burn if they need. And look at this right here. The sales are up 26%. So that's actually not bad. But I'd really like to see this company get back to or just finally make some net income. What do you think about SoFi? Yeah, dude, I own some SoFi technologies. So where do you find companies that have earnings? Here, I'll show you that after this all rows. So here's SoFi Technologies, by the way. I do own this one in my other account right here. Yeah, I got 24 shares left of SoFi. I did take a lot of profits on them. But here's the best part about SoFi Technologies. It's their financial services business. It's so impressive. The sales are up 85% year over year, literally to a new record. So incredible fintech revenue growth, and they're finally profitable, making net income every quarter. Because last year the year before they were losing like 100 million every quarter. So yeah, people are really starting to take SoFi serious, and I think that's a nice just buy and hold for the long run. Said hi, IONQ. Oh, what up? What's up? Yeah, let's check out IONQ. That's actually a quantum stock, I believe. You know what? Let's go to the quantum watch list right here. You know, IONQ, there's some good news and there's some bad news. So yeah, they're a $7.3 billion company, and here's the good news: it's the sales growth. The sales are up 91% year over year, so incredible growth of their sales. But again, the sales are only 11 million, so that's the kind of the bad news. The sales are only 11 million, and they lost in net income the same quarter. 200 million. So and that was real. They really did lose that. So they have a really great balance sheet though. No debt, lots of cash. So it's like a mixed bag there. I really want to see that company get profitable. So someone said, how do you check the earnings? Yeah, on this app right here, if you kind of look in the top right, you see where it says Earnings Hub. You just click that right there, and we can see all the companies that report earnings next week. So I'll search by companies that are just on my watch list. So tomorrow on Monday, we get Progressive, Hims and Hers. Ooh, Polymer reports earnings. This is a company that does earthquake insurance. Wow, the stock's at an all-time high. This company literally does all they do is earthquake insurance. And then on Tuesday we get AMD. I didn't know that. We get AMD, Ferrari, Constellation Energy, Celsius, Digital Ocean. That's actually really interesting. And Thursday we get Disney, Uber, AppLovin, and then Shopify. Yo, next week we got a lot of fun earnings. Yeah, hey, if you want to get this app right here, it's in the link tree in my bio. It's the first link. It's actually a brokerage. It's called Mumu. But yeah, I really appreciate y'all being here. If y'all want to hit the follow button, we go live every day, twice a day. Oh, you know what? September, since you're here, this is the very last stock I'm going to look at. So yeah, I'm going to end the stream here. The best way to support me, if y'all want to support me, again, I don't sell anything. I don't have a course book, Discord. All I have is a YouTube channel. So if you want to help me out, please go to my YouTube channel. It's called Nathan Robert. It's in the link tree in my bio. I'm streaming on there. If you missed anything, you can replay it. The beginning of the stream was really fun. But here, I've never heard of this stock, ODD. Let's check this one out right here. So, the good news is they're making net income every quarter. That's actually a really great sign. So revenue's up 26%, and they're making net income every quarter. So yeah, that's actually not bad there. So yeah, pretty decent balance sheet. Cash from operations is up 10%. Orrin Holtz owns 33% of the company. So nice. Hey, I have to do some more research on that one. Looks like the stock is blowing up here the past couple of days here. Maybe there was some good news, good forecast. But yeah, anyway, hope you guys have a great rest of your day. We'll be live tomorrow. I might even do a live stream in a couple hours, like a midnight live stream. So hey, yeah, thanks for all the follows. Y'all are the best. See you in the next one. Please subscribe to my YouTube channel. It's called Nathan Robert. If you go leave a comment on my YouTube video, say you came from the TikTok live stream, I'll leave you a nice little reply. But anyway, have a great rest of your night. See you later. Good luck out there. And thank you all for y'all on the YouTube live stream. I appreciate y'all being here. Hope you have a great rest of your day. See you, Andrea, Kenji, CryptoPong, Jeff Mack,